Added business. Feist Company expects to sell 400,000 units of its product in the next period. The company has an opportunity to sell 40,000 additional units at $13 per unit. The additional sales would not affect its current expected sales. Direct materials and labor cost would be the same for the additional units as they are for the regular units. However, the additional volume would create the following incremental costs. Total overhead would increase by 16% and administrative expenses would increase by $172,000. Prepare an analysis to determine whether the company should accept or reject the offer to sell additional units at the reduced price of $13 per unit. Leave no cells blank and be certain to enter a 0 where required. Given to you is this information about our current sales of 400,000. That is, our current at 400,000, our sales are $6 million. Our direct material cost are $800,000. Direct labor is $1,600,000. Overheads $400,000. Selling expenses are $600,000. Administrative expenses are $1,028,000. Total cost and expenses $4,428,000, and net income is $1,572,000 right now at the current volume of 400,000 units. If we are going to accept this new offer to sell 40,000 more units at $13 a piece, that would bring in an additional sales revenue of 40,000 times 13, or $520,000 additional sales, which would make our new sales $6,520,000. Next, direct materials. We are currently selling 400,000 units, and the direct material costs there are $800,000. If you divide 400,000 current units into the $800,000 worth of direct material cost, that means that our direct material cost per unit is $2. And it's said that the cost would be the same for the existing units as they are the new units. So we would have an additional material cost of 40,000 units, that's the new units, additional units, times the $2 per unit material cost, or $80,000 would be added to our direct material costs to bring our total direct material cost to $880,000. Next, direct labor. Our current direct labor costs are $1,600,000, and that's over 400,000 units. That comes out to $4 per unit for direct labor. If you multiply that times the additional 40,000 units that we're going to try to sell and make, that would be an additional $160,000 that will add to our direct labor costs for that new volume, which brings our total direct labor costs to $1,760,000. Next, we have overhead. Overhead would increase by 16%. So 16% of the current overhead dollars of 400,000 would be $64,000 that will add to this current overhead figure to bring our total overhead with the new units of $464,000. It said that selling expenses, let's see here, selling expenses, however, additional volume, preparing to didn't say anything about selling expenses here increasing. So if they don't increase, they're going to stay the same, and if you can't leave items blank, then you have to put a 0 in here, and that makes our combined selling expenses the same before and after of $600,000. Administrative expenses was said would increase by $172,000, so we'll add that to the column in the center there, and the combined administrative expenses for the existing volume plus the new volume would be a total of $1,200,000. And now we can add up all these expenses that we're going to add to the new volume, which would be a total of $476,000. Add that to the existing normal volume of $4,428,000 to come up with combined total expenses of $4,904,000. We have additional net income, that is the sales minus the total cost and expenses of $44,000, and we'll add that to the current net income to get a new income figure of $1,616,000. And it looks like as long as these assumptions hold true, we should go ahead and add this new volume because we're making an additional $44,000 in income.